Good afternoon, this is Pat Walker, Emission Winners, making a video here for stocks and for everybody. This is a great question. This is the power of the team, is we're all trying to do the same thing, right? Let's cut to the chase. We're trying to buy stocks at the right time. We're trying to make money. We're trying to control risk. And so this question is really, to me, relevant, again, to everybody. The idea of executing in a sloppy market, selling into weakness too late, buying with not enough volume. Okay, this is great stuff. Let's go in and address this. And I will share this with you. As you all know, one of my degrees is in psychology. And we went hardcore into a lot of different things, including brain disorders. Not that we all have brain disorders, but it was serious classes, very serious classes in a lot of different areas. So we apply that knowledge here. How? There's a great quote, and it's a great thought, and it's very applicable to life, and it's very applicable, that's easy for me to say, applicable to what we do. Only the still pool reflects the stars. I'm not trying to be funny here, folks, okay? I'm being really serious. I'm speaking from my heart. Only the still pool reflects the stars. We look for simplicity, tranquility in what we're doing. We focus, we demand clean and simple entries. And there's a reason why. A clean and simple entry will, by default, give us a clean and simple exit for a much smaller loss, which really helps us. So let's get down deeper here. When the market's sloppy and choppy, and you can see it, and you can say, how do I measure that, Pat? And this is for everybody. Here's the spiders. It's trending up. Everything's fine. Here's the NASDAQ comp. It's trending up. But one thing you notice about this, look, it drops, then it runs up, it gaps up. Then it goes flat. Then it runs up, and then it drops. Oh, look, it runs up, gaps up, reverses, and drops. Oh, look, it lifts again. It's choppy. You can see it. It's trending up, but there's a lot of wiggle room in here that can derail our tactics. So what do we try to do? Naturally, always ride trends. But if you see choppier action where there's not a lot of follow through here, like look at the comparison. Look at the price action right here. Oh, it goes up, goes flat. Oh, it goes up, drops. Goes up, reverses down. Goes up, drops. Versus right here. In contrast, just a steady trend. We like that. Even here. And I'll draw this to help. Steadier trend, and here. Oops, excuse me. Steadier trend. Try to focus on those, and you'll do better. And not just in the NASDAQ, the comp, okay, but even in stocks. I'll share this, like it breaks out and try to ride the trend. It will really help. But now let's really address the key points here. If the market's sloppy and choppy, or you see stocks breaking out and they're not pushing, it tells you, be cautious. Err to the side of caution. A lot of people, and you don't, I'm not saying you do stocks, but a lot of people have this mindset. And again, I know you don't. Oh, the market's open, I gotta be doing something. Oh, we always have to be doing something. We always do things when it's right, and we have the discipline to wait for it. I've got an alert going off here. Hold on one second. We'll drop that down a little bit. My apologies. We'll watch that. I'm making this video real time, if you couldn't tell. And I know this is, and again, this is for everybody. When you see stocks that you're interested in, and you see that, or you buy one or two of them and they don't work, it's telling you, hey, be cautious. We don't impose our will in the markets. We let the action of the stocks guide us. If we see stocks breaking out and they continue going, hey, it tells us, hey, it's good to buy. But I'll flip that coin and say it again. If we see stocks start to break out and they give it back, or there's not a lot of power, it tells us, be cautious. And that really helps us. Now let's address it further. Selling into weakness too late. Oh, this is a great one. This is great self-analysis stocks. This is for everybody. We want to become a machine. I always taught this at the IBD meetups. If this, then that. If this happens, we do that. And we know what that is before we need to do it. and it really helps us. We always have a plan as far as, again, contingencies, what to do. Selling into weakness too late, reinforcing. Watch it. If it starts to slip, sell some. And here is a great investing tactic for everybody. Good investing does not need to be an all or none decision. You could sell a portion. Sell off 25%, 20, 25%, 33%. Sell some and then watch it. It will A, lessen risk, B, that leads to clearer decision making and thinking. It really does work. And again, I'll say it again, never argue with price. So that's on the selling side. Now let's flip the coin to the buying side. Focus on really, be hardwired about this for everybody. Focus on clean and simple bases. Do that, master this setup. And I know you can say, gosh, you say this a lot. It's the truth. I wish somebody would have said to me years ago. Master this setup. Say, I'm waiting for this and I'm doing it. Okay? That's what I'm doing. And you see it time and again. Clean and simple flat base breakout and it lifts off with volume. Master that setup and say, almost get angry about it and say, this is what I'm doing and nothing else. And turn off the noise out there. Now, when it's breaking out, look for volume on the daily chart, but also look for that volume confirmation. If it's earlier in the day, look for volume on the hourly or the 30-minute, maybe even the 10-minute chart if it's early in the day. If it's a clean and simple base and there's volume coming into it, that is a trigger to buy. Buy. But let's take it one step further. Until we have mastered that setup and our actions and reactions to it, the stimulus in the chart, don't go too big, go smaller. And you could say, well, gosh, I won't make as much money. My goal is this. I want people to make money, but I want people to learn the tactics first. And our decision making is clear if we have less shares. Master that, and then you start building on experience, building size, more shares. It's analogous to this, and I'm big on analogies. When we were kids, little kids, we didn't walk right away. We had to learn. It took time. We didn't run. We had to walk before we run. The same thing is true here. We build on experience from doing it and studying it over and over. And it takes time, but it doesn't take that long really, where we literally become a machine. You've heard me say this phrase before. If this, then that. If this happens, we do that. I'm not saying that to be funny. If it's going up and it hits this, we do that, we buy. If it's dropping and we see that trigger spot, we do that, we sell. We become machines. If this, then that. But to get to that point, I'll come back to this start. Go smaller. If we can't make money with 50 shares, we're not going to make money with 500. Let's hone our skills and our skill set. And then, after a period of consistent decision-making, profitability, and risk control, start building your share size. It really, honest to goodness, it works. It works. Master it small and then build from there. Anyway, great question, Stocks. I'm glad you asked. And this is a great video for everybody. This is one that's a study video. Anyway, thank you very much for being a VIP, and I hope this helps. Each person, each VIP is priority, and I want to do everything I can to help. And I thank you.